Hello guys, welcome to the Trading Parrot. Over a weekend, Bitcoin is managing to take the short-term liquidity almost up until 105k and still bouncing off a bear flag, attempting to put a new high. In today's video, I'm gonna compare the current performance that still have tons of similarities with what we did in 2024. So I think it's worth tracking what currently Bitcoin is doing, showing us a fractal of what could come next. If you're looking for the Sunday alpha, I will say the video from yesterday should cover more than that. A 42 minutes video including on-chain data analysis, general markets, altcoin indicators, Ethereum, and a lot more in 42 minutes. Today's video is gonna focus on what's currently going on with Bitcoin, particularly with a rally on a Sunday, upcoming expectations over the next week, and I'm even gonna do some projections on how high we can get if we sustain this momentum. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get to 1,000 likes on a Sunday with Bitcoin about to put an all-time high? That's really going to slap the YouTube algorithm right in the ass to show this content to more people that are desperate to find sense in the crypto space. And a quick reminder that I'm running this weekend a sale on my Patreon shop. There is this code MAYSELL with 35% off that applies all to Alpine scripts and Telegram charts. And I'm doing with Max the last changes to start the alpha of the TTP agent bot. Watch my video from yesterday and the past few days. I've been doing some showcase of what it's capable of doing. And this is definitely something that's gonna help the price of Bitcoin and general markets potentially to have a green Monday. Crossing fingers, because President Trump says that the US has had a very good meeting today with China. This was published around 12 hours ago and is already having some effects in the market even on a weekend. I'm gonna put out a separate video about altcoins and I'm gonna cover Ethereum, XRP, VNB, Solana, Doge, Cardano, Sui, Chainlink, and Avalanche. So stay tuned for the video coming right after this one today. Alright, we are on a Sunday and it seems that we are going to end up getting that third CME gap. As I mentioned yesterday, we had a close at 103.6 on CME Premium. That is more or less 103.2 on Binance prices. And with the Bitcoin price right now at 104.5, that puts already over a 1,000 gap on CME. Of course, we still don't close the price of Sunday. There's still around 10 more hours to go. But if we end up Sunday with a pump like this, let's say into 108, just to be a bit exaggerated, we're gonna create a huge gap in here. And that is not the first, but the third gap that we are already leaving behind. And every time that we get a pump on Bitcoin and we produce a CME gap, everybody wants to feel safe. Everybody says, yeah, CME gaps do not work. And I get it. We all want to celebrate to see our backs pumping over a weekend. It does feel good. But in this channel, we use data to trade, and we are very well aware that more than 97% of the times we close CME gaps. Sure, sometimes it takes a little bit longer. When we were breaking out from the megaphone pattern in November 2024, we left a huge gap in here at around 76 to 80k. Yes, and it took around 110 days to close it, but we did close it. We didn't have to wait for the bear market to get the task done. But as you can see, we only left one CME gap. In this case, I think it's excessive to assume that we're gonna leave 3 CME gaps in a small range and just go on and go to 150k. We'll see about that. It's just about probabilities. I don't have any certainty that we will close them. Aggregated open interest overnight has increased and put a new high here at $30.5 billion. Things are starting to get overheated, but still on May we are just about 11% up. Top bottom weekly is still halfway through in the range of the volatility, indicating that we still have upside. We can see it also in this shape. Remember, this indicator is free. You can find it on my TradingView account. Just scroll until you find the two versions of the top bottom weekly, or you can also access them if you join my Telegram channel and click TTP charts, and then you just talk to the charts bot and request the corresponding chart. If you want to access all the charts, then you're going to need a subscription, including the altcoins. Good thing is that over this weekend we have a 35% discount if you want to take advantage of that. Looking at the 4-hour and each individual breakout that we have had so far, let's remember there's been already 3 impulsive ways on the 4-hour. We could even say on the daily too. The first one from 74 put this triangle, then we put a bearish ascending broadening wedge, and we currently have another ascending wedge or bear flag if you want. The point is that it's bearish, but as you can see, almost every single pattern that was bearish ended up playing out against the forecast of the technical target. These targets say that most of the time they tend to break down. If you look for literature, you're gonna find that they point out the breakdown first, but they usually say do not trade the top of the triangle, do not open a short right there at 99.4 because it can still fake out. This one faked out, and now we are in the middle of this one. The top at the moment is around 105.4. What I mean is can still allow for an extension into that resistance, and potentially we can get the breakdown in here. We need to monitor a breakdown from below 103.5. That is the conservative breakdown. Let's say the price goes to 105 something and then confirms a breakdown like that. There is tons of targets to the downside, but it's really tricky, the profit taking in a situation as where we are, because it's a strong uptrend. We are risking to enter in banana zone. And I'm laughing because I get so many comments. I really hate pronouncing the Z in English. It's one of those sounds that make me giggle like if I was saying something ridiculous. Let me know what sound of Spanish makes you laugh. Although most of the people don't speak Spanish, when you speak English, that's it, because you can talk pretty much to anyone in the world. So why bothering learning something new? Anyways, going back to topic, I really want to discuss the past performance of this breakdown of the 4-hour. Why is it so important? Because we notice these 3 tops in here and we place an extension into 91. That 91 takes the price to over 120k now. It's 126k. That's because this has come back down and it has allowed for energy to accumulate to potentially produce a final move of the RSI into the very overbought territory of 91. That is a potential outcome in here just based on past performance. I wouldn't say we have even 90 or 80% chances of doing that, but it is on the table just based on past performance. It's not impossible to do that. Let's see what happened between 3 and 4. We have 1, 2, 3, and 4 there. So let's zoom in. And you see, I'm already saying zoom because I hate saying zoom. Let me know how you say it. But between 3 and 4, which is around the 90s, right? We get this breakdown of the 4-hour. Right there, Saturday, 5 p.m., we put a hidden divergence that was probably confirmed early Sunday, 10th of November. Right after that, what did we get? We got a breakout from here, from a level of 70 all the way to beyond 90. That was the 4th move and the highest we got with the momentum. At that point, the price moved from the lows when we were at RSI 63 in here, which is price 76, we move up until 90k. So that's 26k more or less, sorry, 16k. I'm going too far of move of the price. Then we enter the stage of bearish divergences. I'm just looking at past performance. This is not a forecast. I am just preparing you to observe the market. Are we gonna repeat this recipe? Is it just gonna rhyme with this? It also can serve us if we go beyond this level to keep an eye if it's gonna fail, and if it's really not gonna do any of that, we can also be prepared. I think that is a clear advantage for anybody that really likes digging into the detail when you're doing your trading. So far so good. We have pinched 62, previously 63. Flag, done. Bearish divergence, done. The price is going up. The RSI is coming down. That is bearish. Was it a trap in 2024? Oh yeah, those were bearish divergences there too. But still we push from 63, 62 to 90, and here from 63 to potentially 91. Is it impossible? Oh no, it has happened. Is it extremely likely? I wouldn't say so. It is possible. Just that. Can you live with that? Well, most people that watch the channel like this sort of analysis, but there is a small group, the tourists, that come here for a final answer. They're not gonna get it, because trading is not about certainties. It's about observing the things and adapting to those uncertainties. When you start smelling that this is not gonna go in that way, you pull out. But it's really good to know that this could play out like this, to sniff it and prepare for that. On the daily, we have some new developments. Since this new huge candle in here, the volume profile has moved. Earlier, the blue line was at 103.8. It has been pushed into 105. That is our new top of the range. And you can see how the price is pushing and pushing and pushing. It really wants to break out 105. Is it going to be a trap or not? Well, I will say that so far over the weekend, we're just humbly pushing and pushing. I still don't see over the weekend any massive move with momentum. We're just sneaking into that resistance. Support continues to be at around 68, 69. That in the price is roughly now 102.4. That is the bullish support for continuation. Beyond that, we can still break the 105, but the lower we go, the less likely we can do it. Remember, we already broke down from the first line of defense, so this will be the second line of defense. And the more we form a channel down, then we get the territory of bearish divergences, where I will say it is still possible for price to still move slightly higher. And on the weekly, if we were to close Sunday like this at a price of 104,645 right now, that is higher than the highest close by $200. Really bullish. If we were to close even higher and take the all-time high, well, that is going to enter definitely with a high probability banana zone. Rejection from 104 will be a lot more healthy if we come back down to the hundreds and we pay due respect to some levels, clear some imbalances, kill the late longs, do a lot of due diligence to make the rally sustainable in time. This rally can go all the way to 120, but if it does it too fast, it's just not gonna last any long. Any professional trader is always gonna give you the answer, I do prefer sustainable, shorter, painful, frustrating, rather than too fast, too high. And if we continue in this trajectory as well on the weekly, we are gonna end up confirming a bullish cross on the MACD. First green line here of momentum. The last one when we started was 14th of October. Really good for the weekly. But as I mentioned yesterday, remember to look what happened with this bull cross in 28th of March 2022. We had 3 green histogram candles. We have a bull cross. We got into 48 and we enter into a bear market. So do not swallow the pill blindly that all you need is only a bull cross on the MACD to be satisfied for 100% certainty of upside. Just saying. And RSI is at 65. Remember that the target we set after we put this double bottom was a revenge rally into 73. That puts the price at the moment at a moving target of 122, let's say, give or take. Also based on the target of this double bottom with a neckline at 93.7. On CPR, we are getting close to halfway through towards the next resistance, which is 109.3. Notice that we haven't tested the first resistance at 101.5. We are in a virgin month as well. That is so far something bullish, particularly if we survive May without going to the pivots and we close May like that. The past time that we did that was in 2023, and we have around 4 more months of upside thanks to that virgin month. And that's what happens after getting something like that. I do want to pay respect now to the diminishing pumps during this bull market, something that we must understand whether you're a trader or you are a hodler. And I will say this affects even more if you are a hodler of Bitcoin. Let's say you bought at 15 or at 20K and you are right now hodling. Something to think of, non-financial advice at all. Nothing is in this informational channel. You can see that from the bottom, a Fibonacci extension to the first stop of 32, then connecting it with the first retracement in here, puts the next pump 3 times larger than the previous one with an extension of 3. Then if we take that second pump and we connect it with this bottom of 49, puts this pump in here just to get even below 1.272. That is a big reduction in terms of the momentum. From first doing a 3, smashing way beyond all expectations from people, straight into an all-time high, driven by the just released spot Bitcoin ETF, institutional investment, fresh coming into this area in here. Then we just got a 1272, very cold performance relative to this, almost 3 times less, and that shows off in the diminishing momentum peaks of the RSI. Then if we connect now from here, from 49 into 109, and then coming back down to this bottom of 74, it is very difficult for me, very difficult to assume that for the first time we're gonna do anything beyond 1272 without first having something dramatically bearish in between to reset things, to cool down momentums. From 74, if we do a 1272, that is roughly 150K. That will be really crazy. And that will produce a late breakout of Bitcoin momentum in the previous cycle once we started the diminishing highs of the RSI. From the top momentum, we respect really well that the third top in here at 48 couldn't manage to break out. If we do it in here, we will be breaking out from 73, right? And first time that we will kind of resume bull market for momentum, which is something that we have never done in history. I really want to get pleasantly surprised that we can do that. If we get just into resistance, which is already something extremely impressive to do, you can see that in 2022 we couldn't do it. We will get to an RSI of 72. That will put the price at 119K, give or take. And in terms of Fibonacci extensions, that will be less than 1, let's say, more like at 0.786 around here, around the 120. Those are targets that from technical point of view make sense, but you know, technicals are not the last word. Something really unique can happen in a cycle and patterns can be broken. If we close May like this will be the highest May. I want to pay a visit to the SOPR on Ethereum. Yesterday, I pointed out that tons of people are taking profits. Now we are at 107. That has printed a sell on Ethereum. The last time it didn't play out, but it's absolutely worth knowing that there is heavy profit taking. Can we survive profit taking on Ethereum? Sure, but be well aware because sometimes we don't. Leverage squeeze as well is getting to the top of the range. Yesterday, I call out we should be expecting at this area to get a second signal. How critical is this situation? Do I need to sell? Do I need to exit my swing on a long? Well, let's look at past performance. What did we do around this area? We got one signal that went down 8%. This one went down 13% after printing. This one straight down to 14%. Which one failed, if you want to call it failure? We have one that printed at 101, then it printed again at 106, and we top at 109, 3K beyond that. The average went down after 26%. Then we got this signal in here that went down 20, this signal yellow went down 16%. So now we have a similar situation that what we have in here. Elevated longs that get to a top according to statistics. Statistics can always be wrong. If you don't believe me, just watch the weather report. I hope these signals are better than the weather report just by looking at the yellow tops. I will say so, but let me know in the comments your own opinion. you can see that it picked the longs there. That was only enough to go sideways. After that, it didn't give any profits, just like it happened in 16th of January. After, we got another pinch of the top, and eventually that was enough, and profit taking went back down, cooled down to the bottom of the band. This indicator is included in the pine scripts, part of the sell as well. And you can see that it's now at 87. So if we get an average, that average will be around 100k. The last time that average was at 106, and from there it gave 26%. So if we were to do something like that, that would be actually healthy for this move. I also wanted to show you the signals that we got during the breakout in 2024. So in the megaphone pattern, that was a good signal. This had a drawdown of 8, but then it went down 18. This one went straight down. This one had a drawdown of 5, but then went down 29. This in the middle of the pump gave 8% down. So I don't have an example here of something that played out bad during the pump. I wish I had one to see what is the right thing to do at that point, when to call it a loss or something like that. But unfortunately, it played out too good in 2024. So as I was saying, this is a bear flag. We trap all the liquidity of the short term. Now we have humble liquidity forming right here from new fresh shorts that are currently entering over the weekend. Not too many shorts. I would like to see some red there to absolutely guarantee that we are going to have a bullish breakout from this bearish pattern. Below the price, there isn't much liquidity. The price went just too fast through the areas. We are probably gonna have imbalances on the fair value gaps, which we're gonna cover just in a second. I also want to cover liquidity pools of the long term, but the big picture. Here we can see 2024 and 2025, and you can see that once we break out from the megaphone pattern, we were targeting these levels of liquidity. We have two big pools that we were targeting, one at the all-time high around 74, followed by one around 82. And personally, I was thinking, well, maybe we're gonna get there, but actually we managed to get pretty far. If we take this flag and we place it like there, kind of we did a one extension, a little bit more as I showed before. So all this area in here from, let's say, 90 into 108, which is a range of 18k, was not driven by liquidation pools. The liquidation pools will have ended at 90. Why am I telling you all this crap on a Sunday and you are already bored of watching so long video of the Trading Parrot? Because there is a level of 113 followed by 125. So we are not gonna be the naive people that think, well, that's the point where everything must stop. Looking at past performance, can we go beyond that? Sure we can. That is the right answer. The answer is not, yes, we will go there. That is retail, right? Let's look at liquidations heat map on the 1 month. You can see we took all that liquidity. What comes next is 92.5, just looking at 1 month when zooming in. 30 days, of course, it's gonna show you a lot of liquidation pools up until 92. We get a cumulative of 13 billion. That is natural during a pump. That doesn't necessarily guarantee stopping the pump. And we're starting to get tons of shorts liquidated, 450 million. Yesterday it was also a lot more. Let's look at the 12-hour accumulations. So shorts are starting to slow down the liquidations. That's because we are in the middle of the flag. If we get another impulsive move, you can expect another bar coming in. And looking now at high block capital, there are orders holding the price that didn't stop the price in the previous flag. So just observing in here, if we get a big peak of selling pressure, let's say an ask of over 0.10, ideally 0.20 to 30, then that is a big deal for holding the price and not allowing, let's call it a selling wall. Funding rates are well in the positive, so there is no alpha from that. Leverage has significantly reduced in all this area in here. The longs were degen all the way up until 103. After that, they cooled down. Let's see how it's going to be the picture on Monday when the market, general markets open. And we continue to have over 1 million of delta, putting the longs at higher risk, just like in 2024 pump. Let's see if this time is going to be different, or if we get a cool down, if we can cut that in half, that will be magnificent. Order book, you can see that we have 70 million holding 105, 50 million at 106, and 60 million at 110. That is natural over a weekend. Last weekend as well, they were holding the previous breakout with significant liquidity as well. And on the Monday, as soon as we got the futures opening, everything started shifting. Let's see what the whales are doing. And purple continues to be in a healthy upside. Brown is just going sideways. Orange, which are small pockets, are starting to close some positions and profit taking. And let's look at the order book on Market Monkey Terminal, which is a free website. And you can see that ask liquidity located above the price up until 110. We can also see some orders at 115. So there is an appetite to short over the weekend. We'll see if on Monday we get good news and maybe they just go away and vanish and they turn that into support. At the moment, support on the order book, we can see it located at 103.2. They just shift that from 103 flat. Below the price, there is not that much more. And the CVD obviously over the weekend has been cooling down so far. Fair value gaps is a huge party of gaps below the price, starting straight away from 104.5, which is a low hanging fruit. Probably that's gonna go away in just minutes. But then below that, we have here from 102.3 up until 97, a huge gap. Below there is even more. I think that's incentive that eventually is gonna get filled as soon as the narrative of everything fixing in the world cools down for a bit. No more tariffs, no more war, no more nothing, everything pumping, and eventually someone says, hey, some profit taking? Sure. And then we get a pullback and we go back to normal. Guys, if you want to trade on a non-KYC exchange, which means depositing crypto and start trading in just 30 seconds, then use my link in the description. With that one, you can benefit from the following bonuses on the screen, which include deposit and trading volume bonuses. This campaign ends on the 15th of May. Thank you so much for watching and hold on until I publish the video on the altcoins.